Dogecoin price prediction: will Doge hit new ATH in 2026? Dogecoin may have started out as a meme coin, but by 2026, it has become one of the largest cryptocurrencies ever to surpass the tens of billions of dollars mark, with over 150 billion Doge in circulation and about 5 billion new Doge created each year through a fixed issuance mechanism of 10,000 Doge per block. What's remarkable is not the complexity of the technology, but three core elements: a network that's been around for more than a decade, massive communities that are active during bull runs, and the massive media effect associated with names like Elon Musk and real-world payment apps. As we enter the 2026 crypto cycle, the question is whether Dogecoin will only fluctuate in familiar regions or can surpass the $1 mark and make a strong breakout that will surprise the market. In this video, we'll analyze why Dogecoin remains a noteworthy opportunity in 2026, whether Doge can explode above its all-time high, key price scenarios, and strategies for riding the Doge wave without getting caught up in FOMO. Watch the whole video with me. Crypto Radar. Dogecoin is still seen as one of the most remarkable opportunities in the 2026 cycle, not because it's new, but because it's been around long enough to prove one thing: it doesn't disappear after market cycles. Currently, Dogecoin has about 170 billion Doge in circulation, with about 5 billion new Doge created each year through a fixed reward mechanism of 10,000 Doge per block, which equates to an inflation rate of about 2.8 to 3% per year and is declining over time as the total supply grows. This makes a very special point. Dogecoin does not depend on scarcity, but on actual cash flow and demand. While many altcoins die out due to lack of liquidity, Dogecoin remains among the top 10 largest cryptocurrencies in the market, with a capitalization of tens of billions of dollars and daily trading volume regularly exceeding $1 billion, enough to sustain its status as a highly cyclical asset. More importantly, it has repeatedly demonstrated its ability to grow strongly in the risk-on stages of the market, especially when retail returns. The biggest difference that helps Dogecoin maintain its monopoly over the thousands of next-generation memes on networks like Solana or Base is the global brand strength that has been guaranteed for over a decade. Dogecoin has an extremely loyal mass user base and is the first name that comes to the mind of retail investors whenever they want to enter the crypto market. This appeal cannot be diminished by momentary trends, as Doge has crossed the boundaries of a digital asset to become a popular culture icon. As the boom phase of the 2026 cycle unfolds, huge retail cash flows will tend to flow into the most familiar, accessible assets, and Dogecoin will surely be the name that drives that widespread FOMO wave. Before we dive deeper into Dogecoin, you can also check out the video Ripple XRP price prediction. Is $5 possible in 2026? An analysis of XRP, another long-standing coin that many investors expect could make a major breakout in the 2026 cycle. What makes Doge price prediction still an opportunity in 2026 lies not in the complex technology, but in three factors that are hard to replace: a simple network that has been in operation for more than 10 years without serious disruptions, a highly virulent community that can trigger global FOMO in the short term, and a narrative layer that is rarely pushed by cultural and mass media elements such as Elon Musk, Tesla, or real-world payment experiments. When combined, Dogecoin is no longer a technology story, but a liquidity-driven meme asset where the price comes not from traditional intrinsic value, but from the cash flow cycle, attention, and level of social spread. And that makes Dogecoin remain strong breakout potential if the market enters a period of excitement in 2026. But to understand why Dogecoin could actually enter a breakout cycle in 2026, we can't just look at history or current capitalization. It's more important to unpack the structure behind it. Doge crypto does not increase in price at random, but usually only explodes when three factors are triggered at the same time. The network platform is stable enough to bear the load of large cash flows. The money supply mechanism creates a balance between inflation and liquidity. And most importantly, the narrative is strong enough to make a meme the focus of the global market. And when we put these three factors together, we will see a clearer picture of why Dogecoin is still going strong after each cycle. These are the three pillars that could decide the whole story in 2026. If you want to understand why Dogecoin could make a breakout in 2026, you have to look at it not as a mere meme coin, but as a system held together by three key pillars. The first pillar is network and stability. Dogecoin has been in operation for over 10 years, is based on the same proof-of-work mechanism as Litecoin, and is merged mined through OXPW, which allows it to leverage hundreds of terahashes per second hash rates from the Litecoin mining ecosystem, thereby significantly reducing the risk of a 51% attack compared to an independent meme chain. This makes Doge one of the few meme coins with a truly operational infrastructure rather than just narrative. The second pillar is the inflation-controlled money supply model. With about 10,000 Doge generated per block, Dogecoin does not have a supply limit like Bitcoin, but the inflation rate has been decreasing over time, currently only about 3% per year, and continues to decline as the total supply grows to around 170 billion Doge. This creates a special state. There is always a supply. They are new to market liquidity, but not large enough to break the entire price structure if demand rises sharply during bull runs. The third and most decisive pillar is the turning point in terms of practical application and legal recognition. Dogecoin's entire macro position has turned a whole new page after regulators officially classified the coin as a digital commodity, placing it on a legal par with Bitcoin and Ethereum. This regulatory clarity not only paved the way for institutional capital flows through ETFs, but also solidified Elon Musk's ambitions as he officially launched a large-scale pilot version of the X-Money payment system, with X-Money aiming to become a financial super app that handles global microtransactions. Dogecoin is facing a huge opportunity to become a native payment layer thanks to its fast transaction advantages, ultra-low fees, and an existing mass community, turning previously vague speculation into a fully grounded growth launcher in the near future. However, understanding the new platform is only a necessary condition. In order to really change your financial position and not get caught in the psychological trap of the market, you need to identify specific target milestones. When the crazy cash flow of the mania phase is officially activated, the price of Dogecoin will break through scenarios from cautious to crazy. We'll move on to the next section to dissect the important price coordinates. When looking at the price structure, Dogecoin analysis shows that it does not grow in a straight line or in a fixed intrinsic value, but operates in a long accumulation, strong boom, deep correction pattern. After reaching a historic peak of around $0.73 in 2021, Dogecoin entered a multi-year correction cycle, losing more than 80 to 90% of its value at one point, before stabilizing again in the low accumulation zone around $0.08 to $0.12 in 2025 to 2026. This reflects an important fact. Dogecoin does not disappear after downward cycles, but always returns to a new equilibrium, lower than the old peak, but retaining liquidity and interest from the market. The key point here is that Dogecoin does not compete with absolute scarcity, but relies on a balance between new supply flows and cyclical demand flows. When the market enters a period of euphoria, demand can rise much faster than the rate of supply, creating periods of sharp price expansion. Based on this structure, it is possible to build three main price scenarios for Dogecoin in 2026, depending on the liquidity of the global crypto market and the return of retail cash flows. The first Dogecoin prediction scenario that we need to seriously consider is the cautious scenario, also known as the sideways accumulation scenario, in the long-term bottom zone from $0.8 $0.05 to $0.10 In the context of global macro challenges, or cash flows in the crypto market are scattered into new technology segments such as artificial intelligence or assets. In the real world, Dogecoin is likely to experience a prolonged hibernation. In this scenario, the current 0.085 price zone acts as an important psychological pivot. The price can repeatedly scan back and forth around this mark, sometimes with deep pullbacks to the $0.05 hard support zone to completely shake off the impatient retail investors. This is the most psychologically challenging scenario for asset holders because the price chart will look extremely boring, the candles will fluctuate with narrow margins, and the volume will drop severely. Moving on to the second scenario, which is the most likely and fundamental scenario for 2026, is a scenario of structural recovery and reoccupation of key resistance levels from $0.15 to $0.30. This scenario will be officially triggered when Dogecoin completes the construction of a solid bottom around the $0.085 mark and begins to record a steady rise. The first target that the bulls need to conquer is the psychological zone of $0.15, which used to be the old resistance in the previous short-term rallies. If the breakout is successful and the candle closes steady above this mark, Dogecoin will create a sustainable growth structure with the following highs higher than the previous peak and the following lows higher than the previous lows on the daily chart. From the $0.15 launch pad, the FOMO cash flow of the retail market will start to return, pushing prices quickly towards the mid-term resistance zone around the $0.25 to $0.30 mark. This is a price area where the technical structure will face major profit-taking pressure from strapped buyers from 2025, so prices will need a period of reconsolidation before thinking of further goals. The third scenario, and the one that every Dogecoin holder is looking forward to, is a frenzied boom that takes the price above the 50-cent mark and heads straight for the ultimate target of $1 to $1.50. For this scenario to happen in 2026, the market needs to be full of weather, geography, and humanity. The first trigger should be a strong wave of Bitcoin growth, pushing the entire crypto market cap to new heights and unleashing a huge amount of liquidity flowing into the large cap group. Soon after, the most powerful media catalyst from Elon Musk, Dogecoin, or the official announcement of the integration of Dogecoin as the core payment currency on social network X, will act as a spark to the gunpowder store. When Dogecoin breaks out of the 2024 high near $0.48, a technical gap will open up, as there is no historical resistance above it except for the 2021 high. Taken as a whole, all three scenarios are not just price forecasts, but actually reflect how Dogecoin operates on the liquidity cycle of the entire market. When cash flow is weak, it accumulates for a long time. When the market recovers, it relocates, and when FOMO returns, it can amplify volatility exponentially. And because of that, the most important question is no longer where Doge is going, but how to stay in place when that cycle starts. Because in highly speculative assets like Dogecoin, the gap between big winners and outsiders is often not in predictions, but in action strategies. And that's why we need to move on to the last part. Investment strategies, a way to eat the Dogecoin wave without getting caught up in FOMO or getting out of the game too soon. Now that price behavior scenarios are on the balance sheet, the most important question is not how much Dogecoin will rise, but how you will act to convert those theoretical opportunities into real profits. The nature of the cryptocurrency market, especially a highly volatile asset class such as memecoin, is a harsh behavioral psychology game. Losers often enter the market in a rush, chasing euphoric blue candles and then frantically cutting their losses when the chart is dyed in red. In contrast, To be able to truly ride the Dogecoin wave in 2026 without being swept away by the current, you must equip yourself with a calculated investment strategy that combines strict capital management, the art of position allocation, and absolute discipline throughout the profit-taking process. The first foundation of an effective Dogecoin trading strategy is the art of position building through systematic price averaging. Instead of risking using the entire capital to execute a single buy order at a fixed time, it is very easy to get yourself into a state of heavy psychological pressure if the price keeps correcting, breaking down capital flows into equal parts for weekly or monthly disbursements is an optimal solution. This strategy helps you neutralize the short-term volatility of the market, accumulate more coins when the price drops, and retain the necessary calm. In particular, the base zone around the current $0.085 level is a golden coordinate to implement the accumulation plan. The continuous accumulation around this base zone, combined with the provision of a reserve capital to catch the bottom more aggressively if there are deep liquidity scans of the $0.05 zone, will help you set a positive average cost, competitive and safe periods before the market enters a formal growth trend. Besides accumulation, the most important principle to help you survive and protect your capital is to think about risk management from the beginning. You need to clearly position Dogecoin as an investment with a high risk factor but a large profit margin. Therefore, the capital allocation ratio for Dogecoin should only account for a moderate portion of your overall portfolio, absolutely must not exceed your own risk tolerance, and do not use precious sources such as borrowed money or essential living expenses. The final piece and the most difficult step for most investors is the realization of profits through a disciplined, piecemeal profit-taking strategy. When the FOMO wave breaks out and the Dogecoin price starts to skyrocket in a frenzied scenario towards the $1 mark, human greed will be stimulated to the maximum, leading us to believe that the price will continue to rise and refuse to sell. In order not to fall into the profit on paper tragedy, you need to set specific profit-taking targets that correspond to macro, technical, and psychological resistance milestones. In conclusion, Dogecoin news today is not an asset that you can value using traditional models, but rather a cycle of liquidity, emotion, and collective consensus. In different stages, it can look like a forgotten asset, but can also become the focus of the entire market as cash flows return. It is this non-linearity that makes Dogecoin one of the most controversial assets, but also one of the most volatile assets in the entire crypto market. And moving into 2026, the key question is not whether you believe in Dogecoin, but whether you are willing to understand how the market works in cycles so as not to be left out when the real opportunity presents itself. Because in cycles like this, the gap between recognizing the opportunity and acting at the right time is often what determines the entire outcome. If you find this perspective helpful, like the video, subscribe so you don't miss out on further analysis.